Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, March 25th, 2019. S&P continues to fall, folks, and this is again directly correlated with yields. The 10-year yield broke below 2.5% on Friday. That was when we had the big drop. It continues to fall today, thus continued weakness in the market. For the last month, 2 months, I told everyone, all our members, I went on these videos, which are free to everyone in the world, and I said, listen, as long as the market holds above 2.5%, it's okay, but if you break below that, the market's going to panic. The market's going to look at that 2.5% on the 10-year yield as a barometer for recession. If you get below that, markets will panic thinking a recession is on the horizon. That's exactly what happened to a T on Friday. Right now, 10-year yields are hovering around 2.39%, so down quite a bit today again. Markets are not selling a huge amount today, but I think that selling could kind of accelerate into the end of the day if yields continue to stay down here or go lower, as a lot of people are going to throw in the towel soon if you don't get a bounce. All right, couple things I'm watching today, folks. Watch BAC. Take a look at the Bank of America. Major gap fill right here. So the banks have obviously been crushed with yields. Yields going lower is the worst thing for banks because it means the interest rate they charge on loans are going to go down. And sure enough, you can see what a drop this has had. But look at that level coming up. This is a major gap fill. The level is at 26.50. So really only about 25 cents away. If it gets there, it should see a bounce. If you can look at other trades out there, other JP Morgan, for instance, this is having an amazing fall as well. I mean, think about this. JPM was at over 108 just, 2, 4, 5 trading days ago, a week ago. All right, it's now at 98 and change. So a $10 drop there. I do have a penciled in level coming up here, guys. All right, there's a gap fill coming up at 97.15. That is where I expect JP Morgan to get a bounce. So 97.15 on that stock. We can look at some of these other banks, which have fallen quite a bit as well. Here you see Citigroup collapsing down. There's a major gap fill coming up on Citigroup at $59, so about $1.50 away. So keep an eye on that. That will be the buy level on this. So again, you can play an individual bank or you can play the XLF as an overall, if these all hit at the same time, you can play the XLF long. But this will be the bounce level, no doubt in my mind. Apple pulling back again for the second day today. Let's go to that chart, take a look at that. This was an amazing run, but all good things must come to an end. When you have a stock that's the biggest, essentially the biggest company in the world, and it goes from $140 to almost $200 in a matter of 3 months, there's a problem there. There's a pullback coming, essentially. And sure enough, you have Friday's reversal. By the way, look at how it closed above the 200. All right, so for those of you that know the proprietary technique of confirmation, this is a great example. So here you closed above the 200 moving average, right? It looks great. It looks like a breakout. The amateurs out there, the people that really don't know how to trade, they'd be like, oh, this is hugely bullish for Apple. Even some of the analysts out there that are idiots are like this. They see it close above. They're like, oh, so bullish, it closed above the 200. Wrong. All right? Understand this game, and this is what I'll leave you with today. Institutions, the smart institutions using algorithms and computerized programs, they know that a bunch of people will go long above key levels like this. So they'll often close Apple above. In this case, they closed it above the 200 to lure the amateur money in at these highs. Now, normal smart money would never do that, right? You would never buy a stock that's run in 3 months from 140 to 100 to 200, so $60 run. But let's be honest, there's a lot of dumb money out there. And sure enough, they jumped in here, they went long, and guess what happened? Whoops, they pulled the carpet right out from under them. Confirmation is a signal we look at. It's proprietary. It tells you when a breakout is correct, meaning it's a true breakout or a fake out. Fake out is what we saw here, and we knew this. I knew this. I went short actually at 190. What was it? 193 average or something like that. We're short right now. We're obviously in the money $5 just from our entry the other day, and we're actually going to see more out of this. The key is this is where you're going. This is first stop on this. You'll be going down to this level, which is around just below 182 on Apple, and this is a beautiful little setup here. You'll get a little bounce off of that, but ultimately you're going to continue down here after you get a small bounce off the 20 moving average in this gap fill. You're going to go here. That's going to be your bigger support. 50 MA coming into that level, gap fill there. Look at all this consolidation, which is telling you there's major support there. That's your buy level for a quick swing trade long, in my opinion. If you're really quick, you could probably do this one as well for a day or so, but this is going to be your multi-day, maybe even a week or two bounce on Apple off that level. All right, so that's where we sit, folks. Again, I am short Apple. We're in the money pretty nicely with members in the research center. This is where it's at, folks. And again, I'm watching levels as the market comes down. I'll be getting ready to go long at certain levels. We're short generally across the board, and we're enjoying this pullback from Friday and today. On the spiders, last thing I'll leave you with here is the spiders coming down. This is where you're headed. So see how the 50's rising up to meet the 200? In the short term, that's where you're going to go. So you're looking at another $3 down on the spiders to get to about 275. Once you get to 275, you'll have some good support there. That should coincide with that first level on Apple. Ultimately, I do think we're going to go lower, but you should see a bounce in yields at some point as we continue to trade down. By the way, yields now at 2.38. Really an amazing drop here as the markets are back to the lows of the day. All right, guys, have a great one as always. Come join us at inthemoneystocks.com. Take the 7-day free trial so you can make some money in this market. We're literally blowing it out of the water, especially even day trading. I mean, day trading, we had 6 winners on Friday, 2 today, as the money is just rolling in with this volatility. This is the gravy. When you get this type of action, this is where we make the most money. Have a great one, guys. Take care.